Hey everyone, Coach Investor back with another video for you today. So in today's video, we're going to go over the 5 tips I wish I knew when I started investing. It doesn't matter if you're a kid, you're a teen, you just started investing, you're an adult, or you're even a parent that wants to start investing for their children. I think those 5 tips could be helping you in your investment journey. So stay tuned for that. But before I do so, if you haven't subscribed to this channel, I would really appreciate it if you hit that subscribe button. And if you like these videos, leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Alright, so number 1 is the best time to start investing was yesterday. The second best time is right now. A lot of you are asking me in each and every video, also my friends have been asking me, and I did this mistake as well. When should I start investing? Should I buy now? Should I wait? What should I do? Well, there's actually a pretty smart guy that has a pretty good quote for this question in regards to compound interest. So compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it. Hopefully you know who that man is. So again, this is very important. There is a huge difference between somebody that started to invest and is in the investment world for 5 years and someone that's in the investment world for 10 years. Same goes for 10 and 20 years. Trust me, the difference is huge between someone that's in the market for 10 years and someone that's in the market for 20 years. Sometimes the difference might even be millions of dollars. Who knows in what you invest, obviously. And then again, compound interest is something that the sooner you start with, the better the results will be in the long term. Which goes into my second point, is time in the market instead of timing the market. A lot of you are trying to time the market each and every time. When we talk about stocks, when we talk about companies that have suddenly gone up or gone down, always the same questions. Is it a good time to buy now? Should I be selling? Should I be buying? What should I do? Again, dollar cost averaging is actually the best strategy for people that always ask the same questions such as these, because it doesn't matter if the stock will go up or go down, you will be buying and you will be averaging your position. Obviously, it depends in which stocks you're buying. Obviously, if you're buying a stock that is in a pretty bad environment and is not doing well, obviously don't continue to buy this trashy stock like Nikola, for example. But if you are in Tesla or Square or whatever, those types of stocks are made for you to dollar cost average. And again, people that try to time the market are usually the people that will lose more money than those people that are more time in the market, which is normal, because when you start to try and time the market, you might be buying a dip and then you think, oh, I'm a genius, it worked out last time. You're trying it again and then you got wrecked and you lost everything you've earned from the first time, and then you try and chase the market again and you're in a losing position before you even know it. And number 3 is actually something I've learned from one of my favorite investors out there, which is Peter Lynch, which is invest in what you understand. Why is it so important to invest in what you understand? Because when there is a market crash or a market overreaction and everything goes down, most of the time, most stocks go down because the overall market goes down. But sometimes some stocks go down because there's something fundamentally wrong with that company. Now, if you're investing in a company that you have no idea what they're doing or what the fundamentals are, then you're probably thinking, oh, they're probably following the market overreaction, let me buy some more. But then when everything goes back up, the stock you're invested in, which you have no idea what they're doing, is going down even more. So that's one of the reasons why it's so important to invest in what you understand. Second point is, I've seen this a lot actually on Twitter recently, is actually parents looking and asking their kids what they like to see, what they like to buy, what their friends are playing with, what their friends are buying. For example, Roblox, some of you might know, they're actually going to IPO later this year. I'm going to do a video about that. So if you have any questions, if you have any extra info that can help me with the video, leave it down in the comments below. But for example, Roblox, lots of parents have been looking at their kids playing these games each and every day, asking their parents to maybe buy them some Robux, which is the currency in the game. Probably lots of other households have Netflix or Disney Plus. So that's another thing you can understand in what you invest in. Again, taking the example from Peter Lynch, he went into a Dunkin' Donut and actually asked people, do you like what you eat? Is it worth your money, etc. Since he got lots of positive feedback, obviously he bought lots of stock in Dunkin' Donuts. The rest is history. He's made millions out of that investment. So again, very important to understand what you are investing in. And number 4, which is actually 2 things. The first thing is actually complementing what I just said, is do the extra research. It's not enough to watch my videos or maybe Chicken's videos or some other YouTuber out there, or read an article that says we are bullish on X or we are bearish on Y. It's very important for you to go the extra mile, do the extra research. I'm not a financial advisor. Maybe you like my videos, maybe you like the investments I've made, but you have to do the extra research because at the end of the day, it is your money, it's not mine. Now, second part of number 4 is be fearful when others are greedy and be greedy when others are fearful, which is obviously a famous quote from Warren Buffett, but which is a very, very important point, especially in 2020, but especially for people that are in the game for a long, long time. When you see the market crash heavily, stocks go down for no reason, this is the time for you to start looking for good stocks to pick up. Because, like I said, sometimes the market overreacts and everyone comes down, even if the fundamentals are amazing. And that's the time where big investors, big ETFs start buying their stocks. For example, ARK Invest have been picking up Slack when it was 24, 25. They've been picking up Teladoc last week when it was at around about $170 or so. This is when you make the big bucks. It's not when everybody is greedy and everything is fine and gloomy and we're all at all-time highs. No, that's when actually you should start and maybe trim your position for an eventual crash of the market that will come whenever it will come. We don't care. We are not trying to time the market. And number 5, I think one of the most important points is do not let your emotions cloud your judgment. If you've done everything that was said just before this, point 1, 2, 3, and 4, don't let emotions cloud your judgment. Don't let the market overreaction make you panic sell a super good position, a super good company to hold for the long term. Yes, sometimes it might hurt to see a position you just started yesterday when the next day it's suddenly down 10%, 15%, who knows, and then another stock that you wanted to buy but you did not buy is up 15%. It happens, shit happens, but that's the way the game works. Stick to your strategy because, like I said, in the long run, it doesn't matter what happened in 1 week, in 2 weeks, in 3 weeks. It matters what will happen in the next 5 years. Is your company going to be here in the next 5 years? Yes. So who cares if the market decided to dump it 10% on Tuesday? Because who knows, maybe by Thursday it will be up 20%. Since you've done the research, you think the company is great, fundamentals are right, so don't let your emotions cloud your judgment. Because at the end of the day, when you decided to buy the stock, you were convinced that at that price, the stock was at a fair value. So don't let that suddenly change because of a market reaction, something that is out of your control. I'll actually add a number 6 and a bonus tip, which is actually pretty good. It's pretty hard to hear, but it's a pretty good one. First up, we have the philosophy of the rich and the poor is this. The rich invest their money and spend what's left. The poor spend their money and invest what is left. And the second one is actually very important, especially for the younger generation out there, is too many people spend money they haven't earned to buy things they don't want to impress people they don't like. Again, this is a quote for young investors, but also for adult investors that start buying things they don't really need instead of investing, which in the future they can buy those things and still have money left. Alright, so to conclude, I hope this 5 plus this 1 tip helped you guys or will be helping you guys in the future. If some of these tips already helping you guys, let me know down in the comments below. If you have any tips to give me, let me know down in the comments below as well. And that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed to this channel, please hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.